Welcome. Do you know why black swans are called black swans? The black swans owe their name to the discovery of black swans in Australia, which disproved the widespread belief in Europe that all swans were white. This concept, made famous by the mathematician Nassim Taleb, represents rare, unpredictable, and high-impact events, which are rationalized only after their occurrence. In the financial world, these events can cause crashes or great profit opportunities. Alessandro Piergentili applies this theory to investments in his book, explaining strategies to exploit market uncertainty.
Welcome to the Hey Jen podcast. Today, we're diving into how to think like a black swan and profit from the improbable. Let's get started.
So what exactly is a black swan event?
Well, a black swan is an extremely rare and unexpected event that has a massive impact. And afterward, everyone tries to explain it like they saw it coming, but they really didn't.
Interesting. Can you give some examples?
Sure. Think about the 9/11 terrorist attacks. No one expected that, but it drastically reshaped geopolitics and markets. Or the 2008 financial crisis.
Oh, and the rise of cryptocurrencies like Bitcoin?
Exactly. Initially dismissed as a fad, but now it's like a financial revolution that few anticipated.
Exactly. So not all unexpected events are black swans, right?
Right. For example, the COVID-19 pandemic isn't considered a black swan.
Really?
Because scientists had already warned about the possibility of a global pandemic.
Ah, I see. So how can investors take advantage of black swan events?
Well, first, we shouldn't underestimate the improbable. Most investors stick to the safe zone. But the biggest profits come from those who prepare for what others overlook.
So we need to be open to unexpected opportunities.
Exactly. Nassim Taleb advocates a barbell strategy where you invest 80-90% in safe, stable assets and 10-20% in highly speculative, risky assets.
So you're balancing safety with potential high returns?
Yeah, it's like having a safety net while still reaching for the stars. You're protected if things go south, but positioned to profit if a black swan occurs.
But isn't that just gambling with part of your portfolio?
Well, some might see it that way, but it's a calculated risk. You're limiting potential losses while opening up significant upside.
I don't know. It still feels risky. Maybe focusing on stable investments is safer?
True, but stable investments often yield lower returns.
That's fair.
And may not capitalize on transformative events. Balancing both can enhance overall performance.
Okay, so adapting quickly is also important?
Absolutely. We can't predict black swans, but we can stay vigilant and react swiftly when opportunities arise. Those who realized early that the pandemic would boost e-commerce profited enormously.
Makes sense. But why do most people ignore these possibilities?
It's because we tend to think within the bell curve, focusing on normal, expected events and dismissing the extremes where black swans occur.
So we need to change our mindset and embrace unpredictability?
Exactly. Instead of relying solely on normality, we should turn unpredictability into an advantage. That's where real opportunities lie.
But how practical is this for the average investor?
It's more accessible than you might think. By allocating a small portion to speculative assets, you're not risking everything, but you're open to significant gains.
That's reassuring. Are there resources to learn more about these strategies?
Absolutely. Alessandro Piergentili has a book and course that delve deeper into how to protect and profit from black swans. It's definitely worth checking out.
I'll have to look into that. Any final thoughts?
Just remember, while we can't predict the unpredictable, we can prepare for it. And those who do may turn uncertainty into immense opportunity.
Great advice. Thanks for shedding light on this topic.
My pleasure. And to our listeners, don't forget to subscribe and stay tuned for more insights.
Welcome to this in-depth lesson of our podcast, Black Swan Strategies. If you followed our previous episode, you already know that the concept of the black swan comes from the idea that the most important and impactful events in financial markets are also the most difficult to predict. This lesson is designed to take a step further, not only understand black swans, but learn how to use them to our advantage in investments. Today, we will talk about 5 fundamental aspects. 1. What are black swans and why do they influence markets? 2. How to prepare for the unpredictable instead of suffering it. 3. What strategies protect and make money from uncertainty? 4. Why normal distribution is an illusion and how to use chance to our advantage. 5. What practical actions can we take today? If you are ready, let's get started right away. Black swans are rare, unpredictable, and hugely impactful events, But the interesting thing is that in hindsight, everyone tries to explain and rationalize them. Yet, before they happened, no one had really predicted them. Let's take a few examples. The financial crash of 2008. For years, investors were convinced that the real estate market was stable until everything collapsed. Bitcoin and cryptocurrencies, initially ignored or ridiculed, today they are a fundamental asset. Amazon during the pandemic, who would have imagined that the lockdown would lead to an unprecedented explosion of e-commerce? Yet, while all these events seemed obvious after they happened, no one had really anticipated them. The truth is that the world is much more uncertain than we like to believe. And here comes the mistake of investors, believing that the future will be similar to the past and ignoring extreme events. The question is, do you want to be caught unprepared, or do you want to turn the unpredictable into an opportunity? If the future is uncertain, we cannot rely on traditional forecasts. In fact, we can say with certainty that classic economic models fail in times of crisis, precisely because they do not consider black swans. Let's think about the pandemic. Investors who only followed traditional models were caught by surprise, while those who had a strategy open to unpredictable events seized enormous opportunities. So, how can we prepare? First of all, we must think in terms of probabilities, not certainties. Next, we must build a portfolio capable of resisting and thriving even in the worst-case scenarios. Finally, we must expand our scope and diversify, focusing on anti-fragile assets. For example, invest in emerging technologies and growth sectors, without becoming stuck only in what is already established. Always keep a portion of the capital in solid and safe assets. Balance risk intelligently. You don't need to predict the future. You just need to be prepared for every possible scenario. You can learn more about all this in Alessandro Piergentili's book, Earn Money with the Black Swan. I'll leave you the link in the description below. And here we come to one of the most effective strategies for dealing with uncertainty, Nassim Taleb's barbell strategy. The idea is simple but powerful. 80–90% of your capital goes into safe investments, gold, bonds, stable ETFs. The remaining 10–20% goes into speculative and high-potential assets, startups, cryptocurrencies, new IPOs. Why does this strategy work? Because it protects you from extreme risks without giving up the possibility of exceptional profits. Let's take a concrete example. Imagine having invested in 10 different tech startups in 2010. Even if 9 out of 10 failed, just one winner, like Amazon or Tesla, would be enough to repay everything with huge profits. The key is not to try to predict which investment will be the winner, but to position yourself to benefit from any great opportunity that presents itself. And now a question for you. Do you have enough bullets in your wallet to hit a unicorn? Now that we understand how black swans work and how to protect ourselves, here are some steps we can take today. 1. Avoid following the crowd. If everyone is investing the same way, they are probably making a mistake. Conventional thinking leads to mediocre returns. 2. Use an anti-fragile strategy. Invest in assets that benefit from volatility, such as startups, cryptocurrencies, and emerging markets. 3. Protect your capital. Don't risk it all on one investment. Use the barbell strategy to ensure safety and opportunity. 4. Exploit the skewed distribution of returns. Big gains come from a few winning investments. If you diversify enough, it only takes one big success to make a difference. 5. Adapt quickly to change. No strategy is static. The world changes, and your portfolio should change with it. In conclusion, black swans are unpredictable, but those who are ready can transform uncertainty into wealth. Are you ready?
Hello, if you found the concepts expressed in this podcast useful, I invite you to subscribe so as not to miss the next episodes. The information provided in this podcast is for informational purposes only and does not constitute financial, legal, or investment advice. Black Swan Strategies and its authors are not responsible for any financial losses resulting from the use of the information provided. Investments involve risks, including the loss of invested capital. This podcast collaborates with some brokerage and financial firms selected for safety, quality, and convenience of the services offered. We may receive a commission for any registrations or trading activities through our affiliate links. We encourage you to always do your own research before investing. By listening to this podcast, you agree to exonerate authors, producers, and guests from any legal liability arising from the use of the information discussed.